Hello and welcome back. In this last session of our unit, we're going to do a practical exercise of stock selection, the sort of methodology that you're going to choose to select your own portfolio. So the method we're looking at is we're going to do a top-down method of stock selection. We're going to look at the outperforming sectors. Going to look for high yield in this portfolio, as we want that to accompany the capital gain to produce an effective return. We'll look for assessing the potential gain, check the financial reports, and once we have our portfolio, we would suggest that we're going to use options for effective return. So the shares, remember, in these examples are purely for education. It is general advice and doesn't take into account your relative personal circumstances. So our parameters for our portfolio is we're going to use an asset of $100,000. And for that, we're going to purchase 5 parcels of approximately $20,000 each. We want to have at least 60% of that portfolio made up of value shares with fully franked dividends. And we want to be able to protect our portfolio, in this case, with exchange traded options, if a pullback occurs. So this spreadsheet that I've got here is an example of what I suggest you use to create your portfolio and to assist you in doing that. So we've got over here the sector that we're going to choose for our portfolio, the code of the stock. Here we're going to see what sort of dividend yield we're going to have with our stocks. Remember, I want to have 60% of fully franked high dividend yield shares. Here we're going to see if they're franked or not. So place the percentage of franking in this column. The fourth column here, the fifth column is, can I hedge this share if it's going to have, or if I feel it's going to have a pullback? We're going to have the number of shares here and the dollar amount we're spending on our parcel. This sort of spreadsheet assists you to select your own portfolio, and when you have all of your selections in the spreadsheet, you might choose to remove some and come up with a final list of what's going to make up your portfolio. So here, remember, we've got our chart. You remember further back in the workshop, we looked at the sector chart. I've produced a chart here again, and I've looked at the 5 sectors that I'm going to choose, outperforming the underlying index. Here you can see in the candlestick pattern our underlying index. I've got the parabolic SAR on my chart as well to look at the peaks and troughs, and I've selected 5 sectors there that are performing either in line with the index or outperforming. So in the dark blue here, we've got our property index. In the brown, our industrial index. In the pink here, we've got a discretionary index. We've got the materials index in the dark brown, and in the green, we've got the financial index. So the next process that you would take is go through all of those sectors, generally the ASX 200 watch list of those sectors, and look through all of the stocks, examine the chart, examine the yield, whether the yield's franked or not, and look at the stocks' benchmark ratios. So I've got a few examples here and the sort of things that may cause me to select these 5 shares in my portfolio. Remember, this is just an example of the process you're going to go through to select your own shares. So the first one we look at here is Westpac. I can see that it's had a nice pullback here and it's climbing well out of that pullback. We've had some accumulation alerts. The MACD is in a nice positive trend, and we've got the parabolic SAR and ATR trailing stop following our trend nicely. Over here I can see that we've got a net tangible ratio of $15.12. Remember, that's the assets if everything was sold, and debts were paid. We've got a PE of 14.5, which is below the current level of the broad market index. We've got a current yield of 6.29%, very nice yield there, and it's fully franked, so you can see the dividend franking percentage down here, and the cent dividend about, which is 94 cents. Up here we can just see the market cap and the details of the registrar that holds the Westpac shares. So this would be one selection. I'm going to put in our hypothetical portfolio out of the financial sector. And next we look at the real estate. So this is a real estate investment trust, GPT, the General Property Trust. And I'm going to look at putting this one in my portfolio. It's in a nice uptrend. It's making nice peaks and troughs in that trend. We can see over here that it has a good return on equity. Operating margin is healthy. We've got a net tangible ratio of 56.6, just a little bit below the share itself. The PE is very low currently, 10.5 times the share price, so that's way under the market level. We've got a yield of 4.15% and a dividend of 13.1 cents. So I'm going to put this one in my portfolio and look at our next sector. And so our next sector is the discretionary. So this is a consumer sector, and the discretionary sector has everything else in it apart from things that we eat and drink. That's a consumer staples sector. And at this time I'm looking at Flight Centre, which has had a nice positive trend here, a pullback within the trend. We can see our accumulation signal, and now we've got the stock rallying nicely from a trend, so it's in a nice position. We can see over here, very low debt to equity, operating margin is fine, earnings per share, 84 cents, net tangible ratio is 68.6, current PE is 18, a little bit higher than the market, which is reflected in this sector overall. We've got a yield of 3.3% and it's fully franked. And the next sector I've chosen is the materials sector, where a lot of mining stocks are. And we can see a BHP, which is one of our biggest miners in the Australian exchange, trending up very nicely with higher highs, higher lows. And we've just had a bit of a pullback here, which the stock is rallying from. We can see here 14.42 is the book value. Stock's trading at 37.19. We've got a PE of 16. Current yield of 5.2%, which is fully franked. So I like that sort of picture, and so I'm going to put this stock in my portfolio. Then we look at the industrial sector. So in this sector, I've chosen Sydney Airport. Been travelling a little bit sideways. It's now in a nice uptrend after an accumulation alert. And I'd consider this probably a growth share because I have looked at Sydney's background, what it's doing, and I like the business model and the future potential. So I'm going to put this into my portfolio more so as a growth investment. We can see here that the current P is very high. So some would perceive it to be well overbought. I think it has more potential. And so I'm going to make this selection into my portfolio. We've got a current yield of 4.75. It isn't franked because it is a trust. And we've got a dividend amount there of 19.5 cents. So I've chosen for those reasons to put this share into my portfolio as well. So we can see now that that sort of methodology has given me 5 shares into my portfolio. Obviously, this has been a very quick representative of the sort of method and process you'd go through. In effect, you would go through all of those top outperforming and performing in line with the index and have a look, and you may come up with some totally different selections. This is purely for your educational purposes and to see the sort of things that we look at to make our selection. So here's my group of shares, and you can see that I've selected out of all of those outperforming sectors. I've got a good average of dividend yield here of around the 5%, which is going to add to my potential capital gain to give me an effective return across the year. We can see that I've got my 60% here of nice high yield fully franked shares, and I've looked at the potential of how I can protect these shares, and I can see that every one of these shares can be protected with an exchange traded option, which has been my preference for how I'm going to hedge or protect the shares in a downturn. We can see that we've calculated our parcels here, all slightly under the 20,000 mark, and that's made up the bulk of my portfolio. So do this exercise yourself. Use your spreadsheets. You might have 10 or 12 different shares here and decide, no, that's too many. So you pick the eyes out of them or the quality out of them, and you'll end up with a good amount of shares. And predominantly of the share portion that you're going to allocate in your overall portfolio, you'll start off really with dividing them out with equal amounts, and you might change them as the process goes along. So just to summarise the process, we've chosen our sectors. We would look at the yield, we'd assess the franking, we'd look at the financials, and we'd look at the benchmarks that you've learned in this unit. Remember to compare like industry with like industry. The shares in that industry. You come down to your selections, and the next step that you would choose in your portfolio selection is looking at the charts to time your position into that share at a timely period where you've got maybe a pullback and then the market moving back into the upward direction. You would create your own investment signals on your charts for those for that timing. Once you had the shares in your portfolio, you obviously need to monitor them for active management so that when they take a pullback, you can hedge that pullback with a CFD or an option. Obviously, you need to do both of these units in workshops so that you understand these products and so that you are prepared to protect your portfolio when you come to a downturn, either in the market or in one or two individual shares. That concludes our interactive exercise on portfolio selection, and it does conclude the training in this unit. So thank you for joining me, and good luck with your investment.